Most investors focus on returns, but fees are one of the few things that we can actually control, and they matter a lot over time. So in this video, I'm going to be breaking down the lowest fee ETFs available to UK investors in 2026 across all of these categories. Now, fees aren't the only thing that matter when choosing an ETF. However, they are one of the most important factors to consider. I've used this very specific set of criteria on screen to build this lowest fee ETF list. I have checked, and all the ones I mentioned in this video are available on Trading 212, one of the best investment apps in the UK, particularly if you're just starting out. So if you'd like to sign up and get a free fractional share, you can use the link in the description or use promo code MMS in the app. This is an affiliate link, and I'll put the relevant disclaimers on the screen, but thank you in advance to anyone who uses it. A lot of the ETFs we're going to go through in this video should also be accessible on other major UK platforms. It just depends on what specific platform you're using. And finally, one more thing before we get into the video, I've also pulled together a free PDF with every ETF that I talk about in this video, plus a few extras, so you can download that and refer back to it later. It's the first link in the description, and I'll also try to update this PDF regularly so it always stays up to date with the lowest cost ETFs for UK investors. First, let's start with the UK. The FTSE 100 tracks the largest 100 UK stocks. The lowest fee options are the iShares FTSE 100 ETFs, with both the accumulation and income versions charging just 0.07%. As a quick reminder, accumulation funds automatically reinvest dividends back into the fund, whereas income funds pay those dividends out as cash into your investment account. As a rule of thumb, if you don't need the income today, it's usually better to go with the accumulation version. It just keeps things simple and means your investing is more automated and hands-off. There are also Vanguard FTSE 100 ETFs, which are another option, but they are slightly high fee at 0.09%. Next up, the US. The S&P 500 tracks the largest 500 companies in the United States. This is a highly competitive ETF category with lots of low-cost options from some of the biggest asset managers in the world. And just a quick note on that, the main providers you will hear about are iShares, which is owned by BlackRock, Vanguard, and State Street, also known as SPDR or SPDR. The lowest fee S&P 500 ETFs in both the accumulation and income share classes are provided by State Street with a rock bottom fee of 0.03%. There are also plenty of other S&P 500 ETFs available from other fund managers, all with very low fees. Just as a reminder, all of this is included in the PDF I mentioned earlier, first link in the description. Next up, we have the Nasdaq 100. This index tracks 100 of the largest non-financial companies that are listed on the Nasdaq stock exchange. Once again, the lowest fee options in this category, in both the accumulation and income share class, come from the same provider. This time it's UBS with a fee of 0.13%. However, these funds were only launched recently in March 2025, which means their assets under management are still very small, relatively speaking. If you'd prefer a larger, more established option that more closely meets our criteria that we ran through at the start of the video, there are some more well-known Nasdaq 100 ETFs from Xtrackers, iShares, and Invesco. Xtrackers is the lowest fee option here at 0.2%, whilst iShares and Invesco's are much larger in fund size, but they do come with a relatively high fee at 0.3%. This is a good example where the lowest fee option might not actually be the best choice, depending on your preferences and other factors when assessing an ETF. Next up, the Dow Jones Industrial Average is one of the oldest indices dating back to the 1890s. It only includes 30 companies. These companies are manually selected and it is price weighted rather than market cap weighted, which is unlike most ETFs these days. This index is much more concentrated than broader indices like the S&P 500. I did some digging as I was interested, and there are very limited ETF options available to us as UK investors. None that really fit the criteria I've used in this video, so for most people, it's not going to be the best choice. That said, if you are curious and do want to explore it further, I'll put a few options on the screen. Now let's move on to developed markets. This is where things get slightly more complicated because there are a few different indices that aim to do a very similar job, which I'll show you on screen now. In practice, these indices all track around 20 to 25 developed markets, the US, the UK, Japan, and over the long term, they've delivered very similar returns despite small differences in country weightings and index construction. Overall, the cheapest accumulation option is WRDA from UBS, which tracks the MSCI World Index for a very low fee of 0.06%. And the cheapest income option is MWOZ from Amundi, which tracks and this is a bit of a mouthful, the Selective GBS Developed Markets Large and Mid Cap Index with a fee of 0.05%. There are plenty of other low-cost ETFs that track the MSCI World Index, as you can see on screen here. Most of them are from large fund providers with plenty of assets under management. Vanguard also offers these two ETFs, which track the FTSE Developed Index at a slightly higher fee of 0.12%. However, one important thing to note here is that developed market indices aren't truly global, as they exclude emerging markets. Moving on to emerging markets, it's a very similar story. There are a few different indices we can track here, as you can see on screen. In practice, these indices all track around 20 to 25 emerging markets, and once again over time, they've delivered very similar returns despite small differences in the country weightings and index construction. Overall, the cheapest accumulation and income options come from HSBC this time, both with a fee of 0.15%. These ETFs track the MSCI Emerging Markets Index. Vanguard also offer two ETFs that track the FTSE Emerging Index at a slightly higher fee though of 0.17%. There are actually quite a few options here, also quite a few options when it comes to global ETFs, which we're going to come on to next, and I'll include all this extra information in that PDF I mentioned earlier. Finally, let's look at global ETFs. Once again, for the third time, there are a few different indices we can track here, but once again in practice, they have all delivered very similar long-term returns despite small differences in the index construction and country weightings. Overall, the cheapest accumulation option comes from State Street with the Spider ACWI ETF. This ETF charges 0.12% and tracks the MSCI ACWI index. The cheapest income option comes from Amundi. This is with the ETF PACW charging just 0.07%, which is a rock bottom fee, and it gives huge diversification. This ETF, and this is going to be an even bigger mouthful than last time, tracks the Selective GBS Global Markets Large and Mid Cap Index. There are also other excellent global options available with slightly higher fees, including Vanguard and Invesco ETFs tracking the FTSE All World with fees of 0.19% and 0.15% respectively. In reality, all the specific ETFs I've just mentioned are all strong global ETF options. One downside of most global ETFs is that they don't include small cap stocks. The FTSE Global All Cap does include small caps, but at the moment there are no ETFs tracking it, only traditional mutual funds. Another global index that includes small caps is the MSCI ACWI IMI, and there are ETFs available that are tracking this index. For example, the IMID or IMID ETF from State Street. It's listed on the London Stock Exchange, but it's currently USD denominated. There's no GBP or pound version for us UK investors, which is unfortunate, but it is one to watch in case a pound version ever comes out, especially given its very low fee of 0.17%. And they are the lowest fee ETFs in those various categories. In all honesty, for most investors, a simple global ETF is usually more than enough, and it probably should be the backbone of our portfolios. So watch this video here next, where I've ranked the best global ETFs for us as investors.